Joining us right now, commodity guru Jim Rogers on the show. Jim, hi, good morning. Good to have you once again on ET Now. What a super cycle, Jim, commodities are currently in. And, you know, metals is something which is a well-discovered story, and we've time and again spoken about it with you as well. What I want to start with is what's happening in the agri-commodity universe and the food commodity rally currently, which is at play. Everything from corn to lumber to soybean oil to palm oil, all of them are strengthening.
Yes, we've discussed this before, that I'm bullish on agriculture, and I'm still bullish on agriculture. They've been very strong, but copper's making all-time highs. Iron ore is making all-time highs. There are lots of things that are going up, as we've discussed before. I suspect they need to correct for a while, but I'm not very good at trading. You should watch ET.
Sure, but none of our chartists seem to believe or foresee any kind of correction in the offing for metals universe. Having said that, I mean, valuations and the kind of price appreciation is one story, Jim. But do you think the fundamentals will continue to support the metals rally? You just talked about copper. But are all the parameters and data points in support of a metals rally for a long haul?
Well, apparently the world is going to have electric vehicles in the future. It's all over the world. They're changing to electric cars. Electric cars use several times as much copper as a regular car. So if we're going to electric vehicles, I suspect we're going to use a lot more copper, a lot more lithium, a lot more lead, a lot more of all of these things. So yes, the fundamentals, and copper production is not going up much. So yes, the fundamentals are there to support metals.
You know, just wanted to get in your view, Jim, as to what the outlook is as well when it comes to the dollar as well. I believe, if I recall correctly, that you were long on the dollar the last time we spoke. What exactly is your sense as to how things have shaped up for the US dollar so far and where you see the greenback headed?
Well, I want to repeat again that the US dollar is a terribly flawed currency. America is the largest debtor nation in the history of the world, and the debts go up every day, every hour. So yes, the dollar is very flawed. But in my view, when people look for something, a safe haven, they look for the US dollar for historical reasons. And my view is that the US dollar, the next time we have big market turmoil, the dollar will go up a lot, it'll become overpriced, and then I'll have to sell it and find something else. I have not changed that view, but I want to repeat so that everybody knows the US dollar is a terribly flawed currency. I would be short the US dollar, except for that it's got this status, this mental status as a safe haven. It's not, but people think it is.
Okay, fair enough. How are you looking at the overall support that metal prices have been getting from China ramping up their infrastructure spending? Do you believe that as a shift of growth back towards services, we will see a slowdown in the overall infrastructure spend? And do you believe that the scenario could potentially change on that front?
Well, potentially anything can change. Potentially, yes. But remember that the U.S., Mr. Biden says he's going to now spend huge amounts of money on infrastructure. And so if he does, that will certainly replace some of the Chinese demand, which might slow down. The whole world wants to spend money on infrastructure now, rightly or wrongly. And so I wouldn't give up on the infrastructure spending yet.
Okay. What about the Bitcoin? I'm just very curious because we've seen so many real cycles playing out with the trajectory of the Bitcoin and the way it's going. What are your thoughts here, Jim?
Well, I have never bought nor sold Bitcoin, so I'm probably not the right person to ask. It seems, just looking at markets, that Bitcoin has peaked, and many cryptocurrencies have peaked. As you know, there were thousands of them. Many hundreds of them have already disappeared. So if you're very good at trading, it seems to be a nice trading vehicle. I am not a trader. I'm not any good at it. But if you're good at trading, why not? At least until something changes and they make it illegal or something. I would not be trading them now. There's been too much of a bubble. Bubbles always pop. I have no idea when this one will pop, but it doesn't look sound at the moment from a market trading point of view. But I'm a bad trader.
Jim, I just want to get back to the commodity call and especially agri-commodities, because you've got it just so right with the entire bull cycle in the agri-commodities space. Do you sense, much like metals, that there is going to be some consolidation or correction there as well, or would you say that it's got further headroom given what's happening across agri-commodities, like I said, with corn, with lumber, soybean, palm oil, etc.?
Well, yes, I got it right, but don't forget, I make many mistakes. I've made many mistakes in my life. Yes, I would expect there has to be a correction in most commodities. You see what's happened with copper and some of the rest of them. I've told you that the fundamentals are probably sound, but they've all been going straight up. And having been around markets a long time, when things go straight up, they usually correct for a while, even if the bull market's going to continue. Something like silver's up a lot, but it's still down 50% from its all-time high. Sugar is a disaster from its all-time high. So some things are still probably okay, but be careful of the ones that have gone straight up, including copper.
Sure. Jim, let's talk about some of your mistakes then. And I don't know whether it's mistakes. Let's just be political right and say the call which didn't work as well. What's happening with gold and silver? What is your stance here? You just touched upon silver, but as an investor / trader, what's the stance that you're taking on the precious metals?
Well, you want to talk about my first wife? Oh, what a terrible mistake that was. I've made many mistakes in my life. Silver's gone up a lot in the last couple of years. It's more than doubled, but it's still 50% below its all-time high. I own silver. I expect silver to go much higher. I expect silver to make a new all-time high sometime in the next few years, and gold too. So, again, I'm not very good at trading. Sugar, I'm optimistic about sugar, but sugar has not boomed yet. It should before this is over. But my mistakes usually are mistakes of timing. If I wait long enough, I usually get it right. But the problem is my timing can be horrible.
Okay.
Jim, I just want to draw a bit of a parallel, given the fact that we've seen this sort of a super cycle play out in the commodities world, with prices up an average of 80% through the month, through April 20. Can you just give us a sense as to whether or not you're comparing this sort of a super cycle that we're witnessing now to what we saw in the year 2008? How do you compare it?
Oh, well, I would suspect I'm long commodities. I'm long nearly all commodities. I would suspect that commodities will go up for several years now. We talked about some that are still down a lot. So there's a lot. Oil is down 50% from its all-time high. So there's still lots of upside left in commodities. I have no idea how long it will happen. When stocks go into a bear market again, they're not in a bear market now, but probably sometime in the next year or two, they will go into a bear market. Commodities will probably join at least for a while, but commodities could very well go higher during a stock bear market, because remember, people will be worried about inflation, and commodities are seen as inflation hedges, rightly so.
And where do you stand, Jim, when it comes to crude oil prices and the trajectory going forward? Because it still continues to remain below the pre-pandemic levels, and some experts seem to suggest that the pandemic could perhaps change the demand patterns for crude quite completely.
Well, yes, pandemic affects demand for everything. But remember, oil, because of the fracking, we had a big bubble in fracking and a lot of new production came online, but now the fracking bubble has popped. It's still fracking, but it's not like what it was before. So in the meantime, known reserves of crude oil all over the world continue to decline. So I would suspect that crude oil is making a complicated bottom here, and we're going to look back in a few years and realize that crude oil is and has been a good place to be. Not forever, because obviously a lot of oil will come online and demand may slow down because of electric vehicles, et cetera. But I would not give up. I am long energy as we speak.
Okay. Jim, what do you think happens next? All these worries about inflation, how do you think it's going to play out? Do you see the Fed actually acting sometime this year on that? Do you think they'll be compelled to hike those rates?
Well, in the last few years, the only country that's had a sound central banker was India. I mean, he's gone now. I think he's a professor somewhere, but I wish he were running the American central bank. He is and was a smart guy. Most central banks continue to print huge amounts of money, and historically that has eventually led to higher prices and to inflation, whether we like it or not. And if they're going to continue to print a lot of money, which they apparently are, it has always led to higher prices, and I suspect it will this time as well. I own all the commodities through indexes, and I suspect that we will have higher inflation.
All right. Do you see any risk of a sharp fall in the near future, even though, of course, you stacked up pretty heavily on the commodities and some of those bets which are not directly related to some of the other volatile pockets on the exchange. But do you see, I just want to get your opinion as a veteran investor on whether or not you see any near-term risk, in light of that.
Near-term risk in commodities, of course. I mean, copper's at an all-time high. It went straight up. Whenever something goes straight up like that, it should correct in order to keep the bull market going. So I certainly see corrections possible and probable in commodities. If you're talking about shares, certainly the American stock market looks like it's beginning to have some corrections coming. But in America, if stocks go down for a while, the central bank is going to panic, and they're going to print more money and do everything they can to get the markets up. The politicians and the central bankers in America are not very smart. All they know is to print money and make things go higher. It's not good for America, but they don't care. They care about the next election.
Understood. Jim, I know you've continued to be bullish on commodities. You even said just a short while ago, recently when we spoke to you, you'd continue to buy more. For those investors who perhaps missed out on the rally so far, what would you advise them?
Well, I would suggest that maybe you learn about silver, maybe you learn about sugar, you learn about some of the things that haven't moved up so much. Because normally when a bull market comes, everything goes up in the end. So if I were looking at commodities, I would look at the things that have not moved or have not moved as much yet, such as silver, such as sugar, and some of the others. I wouldn't rush out to buy copper. Well, if it corrects, maybe you can, but not making all-time highs. That's not the way I invest.
Besides the sharp run-up, though, Jim, what could really spoil the party for commodity supercycle per se? Or would you say that the fundamentals are strong and raring to go, which is why commodities in particular make for a stronger case as opposed to equities?
Well, commodities certainly have a stronger case than equities now because they're down. I mean, many of them are still down a lot. I mean, the American stock market and many stock markets are making all-time highs. So commodities are the only asset class that I see around the world that's cheap on a historic basis. So yes, I would look for, especially agro. I mean, agriculture has been a disaster for years. Many commodities have been disasters. So I would much rather own commodities than American stocks, and I'm going to use America just because it's the biggest stock market in the world. So I'd much prefer to buy commodities than I would to buy shares. If you can find the right shares that are cheap and that haven't moved, you will probably make a lot of money. But commodities as a class are the cheapest asset class in the world right now.
Jim, to what extent do you think this commodity super cycle could trigger inflation in the world, and which do you believe would be the economies that would be the most vulnerable?
Well, it's already causing inflation. You saw the numbers that came out of America this week. It's the highest inflation they've had in years in America. And other countries are having the same things. You know, if the price of corn goes up, that affects everybody because everybody eats corn in one way or the other eventually. So inflation is here. Inflation is going to affect everyone. It's going to certainly affect some countries more than others. But I'll keep using America just to keep it because it's the largest market. It's going to affect America a great deal because interest rates are so low in the United States that when inflation comes back, it's going to have a big, big effect on many American cities, companies, states. There are going to be some bankruptcies in America when interest rates go higher. And Japan, too. I mean, Japan has got a horrible problem as far as debt's concerned. Inflation is going to be disastrous for Japan when it comes.
Just going back to crude oil prices as well, what's the sense that you're getting as to how we could see, OPEC Plus managing the level of supply and how you've read into the situation so far?
Well, I know you have to report about OPEC, but in my experience, OPEC is more PR than reality. Oil prices are more independent of OPEC than OPEC would like you believe. This basic situation is known reserves of oil continue to decline all over the world. And since fracking has popped, that bubble has popped, the supplies of oil will continue to decline. And unless something happens dramatic, demand is going to continue at least stable and maybe even go up once the pandemic is over. And in that case, well, as I said, I own energy. We'll see if I'm right or not.
Sure. Jim, just wanted to understand as to what your view on steel is right now, because given China's decarbonization drive, that's clearly limiting steel production. And this is also coming at a time when the Biden government wants to buy trillions of dollars of steel for his stimulus plan, the mega, multiple trillion-dollar infrastructure package that he announced.
Well, all of those movements are bullish for steel because if you have to cut back dirty production, and producing steel is pretty dirty, that means there's going to be less supply of steel. And we've discussed before that there's going to be more infrastructure around the world, including the U.S. or especially the U.S. So the more infrastructure building at a time when steel production is certainly not going to go up, supply is certainly not going to go up because nobody's going to build a steel mill. A few will build a steel mill, given that it's so dirty. So that's bullish for steel.
Okay. What are the kind of, how high do you see, for instance, the prices going, Jim? Gold, silver, give us a sense. Or how much more from here?
Before this is over, gold will make new all-time high. I mean, not now. I'm not buying gold or silver right now because of this correction, and I expect this correction to go on for a while. but I'm a bad trader. But I will buy gold and silver, more gold and silver, sometime later, next month, next year, sometime. But before this is over, gold is going to make new all-time highs, and silver too. Silver's down 50%, so silver's going to at least double when the bull market resumes, and gold is going to go much, much higher, because when people lose confidence in governments and currencies, they always go to gold and silver. At least they always have. I've told you before, I'm a peasant. All of us old peasants want to have some gold and silver in the closet, under the bed, when things go wrong. And I will buy more gold and silver, and both of them will go much, much higher sometime in the next few years. Do not sell your gold. Do not sell your silver.
Point noted, Jim. But just to the point that you were earlier making, that you actually see a heightened demand, and a big one at that, given how the world is now increasing their infrastructure spends. The fallout of that also could be, Jim, that maybe there could be a supply deficit when it comes to steel in particular, compared to what the demand is, and you foresee yourself that there's going to be a huge upsurge in demand. Do you see a supply deficit happening, and that could escalate prices further, have the inflationary impact, and it's almost like a domino cycle?
For steel, yes, of course, because nobody is building steel mills. It's a dirty metal, according to the politicians. And so, of course, if steel mills close and or no more are built, and we have an infrastructure surge, of course it could go higher and will go higher. By the way,
Jim,
I am more.
as always. Thank you so much.
Just a second. Wait, 1 second. I want to make sure I'm more bullish on.
Sure.
I'm more bullish on precious metals than I am on steel, just to be sure. And I hope, by the way, since I love India so much, I hope you can do something about your problems, your pandemic problems. It's just heartbreaking to read the paper every day about India, for me.
Yeah, it sure is. We're just counting by the minute as to whether things are going to stabilize anytime soon. Fortunately, the mini lockdowns are doing the trick, as is the vaccination. But Jim, great to have you on the show, and thanks as always for your concern for India and Indians. Good to speak with you.